Started.
Okay.
Welcome back to our final session of today's long-term care impact day. Don't be scared of long-term care. Our final session of the day is from Cindy Harris, Director of Sales at LifeSecure. And the presentation is Don't Let LTC Planning Decisions Become a Daunting Nightmare. Cindy, welcome. Take it away.
Take it away. Everybody, I hope you're still awake. If not, get your trick-or-treat bowl out and eat some candy. Well, thank you for having me. Like Zach said, I'm Cindy Harris with LifeSecure Insurance Company. So today I want to talk a little bit about, what long-term care is, how it works, and who LifeSecure is. So some of you on the call may not know who LifeSecure is, so just want to briefly go over that. And then talking about just, how do we make it not so scary for our clients? And scary can mean many different things, like from the cost is too high or how to select your benefits and things like that. So we're going to talk a little bit about our product and how it works. And it's a little bit different from it is traditional long-term care, but we kind of looked at the market and kind of said, well, what are people really buying? And we made a very simplified plan design. So before I get into that, for those of you who don't know me or LifeSecure, LifeSecure was started in 2006, and we are based in Brighton, Michigan. And we are owned, our parent company, 80% owned by the largest single state Blue Cross Blue Shield company in the country as a single state Blue. So in 2016, we were the #1 carrier in the worksite space. We were doing a ton of business in worksite. We used to be an individual and worksite, but decided to just really focus on the worksite because that will fit in with the rest of our core products that we have at our company. So we slowed our roll a little bit because we were moving like a freight train. But in 2016, we were the #1 carrier in worksite. That's per LIMRA study. And then in 2021, everybody knows what happened in 2021 with the state of Washington. We were the #1 carrier that insured the most number of lives out of all the traditional long-term care companies. So a little bit about who we are. That's a little bit about LifeSecure. Been doing this a while. We now offer other products as well to complement the whole suite of products, more in the worksite space. So the more ancillary type products like accident, critical illness, hospital recovery, a couple things like that. So with that in mind, why that's important is this is why we designed our plans the way that we did to fit in that worksite space. So let's go ahead and move along to the next slide. And my marketing department might got a little bit over carried away with the Halloween theme. So there you go. It wasn't me. I'm not that creative. All right. So when we talk about long-term care in the worksite, and we say it doesn't need to be scary. So we know that, consumers obviously still purchase individual products, but when an employer endorses something, the employee feels more comfortable. So like the employer endorsed something, so this must be good because my employer endorsed it. So they tend to feel more comfortable. So we do a lot of worksite in the small group space, which you're going to see here in a minute. So we looked at to see with the LIMRA studies, what are people really buying when you look at traditional long-term care? And before I get into our benefit banks and how they work, I want to say I think all products are great. I love the hybrid products. I love all the different ones, and I think there's a need for everything. And I think Ramon said it really well I got on the last part of her call, but was, really understanding what your clients' needs are and what they're looking for and what is going to be the best fit for them. So sometimes it's not going to be traditional long-term care, and it's going to be something that has that mix. So it's really finding out what the employer and the employees are looking for. But when you talk about long-term care with LifeSecure, we tried to take the scariness out of it. And I was an agent for 20 years and sold long-term care insurance. And I know that sometimes you give a client too many choices and their decision is not to buy because they're confused. So, and I know a long time ago when I sold insurance, 10 years ago, I sold insurance to be exact for 20 years, that ages me. It's like I was always taught, you got to sell that big benefit bank. You've got to sell that 5% compound inflation. Otherwise you're not doing your client you're not doing a good job for your client because you're not selling them what they might really need in the future. Well, I don't disagree with those things. And I sold unlimited policies. I did all of that, just like probably many of you on this phone that's been doing this a long time. In today's society, so we start looking and studying who's buying what and why. So in the work site space, we see that our average policy that somebody buys, depending on the age, our average age is 48 years old, and they buy more of the $100,000 benefit bank, which you see up on the second box on the slide here. Because they look at it like they're buying some protection and they're not having to spend a lot of money on long-term care, but they've got that, they think of it almost like a term life, like they've got this policy here set aside for long-term care. And then when we get in our age groups of more of like the 55 to 60 that have experience, they'll tend to buy more of the $200,000 benefit bank. So with LifeSecure, and I apologize, I have some allergies, so I'm going to make myself crazy clearing my throat. So bear with me. We offer 4 plan designs, and that's it, and they're up on the screen. You've got 50,000, 100,000, 200,000, or 300,000. So not a lot of choices. And you might think, well, God, that seems very limited for people. When in fact, it's easier for people to make a decision when they have fewer decision points. So the way that our policy works, if they get the $100,000 benefit bank, which is the second one there, they're going to get a $2,000 monthly benefit. And each month they can decide from month to month, they want to utilize our 30% cash alternative, which pays for family members, friends, whomever to take care of them. So in that case, if they chose that, they'd get $600 a month for a cash alternative. Now, I know what a lot of you are thinking on the call. You're probably thinking, well, that's not $2,000 a month. That doesn't cover much. And you know what? You're right. It doesn't cover things. We all know that depending on where you live, average nursing homes might be $7 grand, $8 grand a month. Home care facilities, $5 grand a month. But a lot of people like to stay at home. So they might like to use the $2,000 a month at home and have a service come in. So it's about giving them something, because there's that thing we all know that's called coinsurance. They can use some of their Social Security benefits, savings, things like that to kind of help. And really, when you think about long-term care, it's not always about how big of a plan design that you have. I've sold to a lot of very wealthy clients over the years. And a lot of it is about the peace of mind and taking the burden off the family on what they're going to do next. So it's about helping that family. It's not really about the client. In most cases, it's about how to take the burden off of your loved one. So this is our plan designs. You got 4 easy options in the work site. This works really, really well because there's not a lot of choices. You've got your 4 plans and you give them a quote, and it's they pick 1, 2, 3, or 4. Pretty simple. All right, moving on to the next slide. Our optional benefits. We do offer optional benefits of the 1%, 3%, or 5% compound inflation option. So the 1% for the states that offer the, and I just drew a blank. I drew a total blank on my name. Carol, what is it? Why did I draw a blank? My Lord have mercy. And I know this like I know my name.
Okay.
So what was that?
Go ahead. Ask me the question so that the.
Well, so why am I drawing a blank here? I don't even know. So they match your dollar for dollar. Insurance protection.
Matching dollar for dollar is the partnership program.
Partnership. God, I totally drew a blank.
That's okay. This is okay. But
my brain
program is
blank.
Yeah, has been out for a while.
So it's a partnership.
Yeah.
So you've got the 1%. So if somebody wants to add inflation, they can. So they're not making a lot of choices. They're first of all picking that plan design, and they're going to say, do you want inflation? And do you want to add the non-forfeiture benefit rider? So we offer all 3 inflations you see on the screen. Pretty simple. All right, we'll go to the next screen. So this is just a sample. So I wanted to give you guys an idea of what a cost would look like. So we'll go to the second column under benefit banks, looking at someone that's 50 years old. If they buy a $100,000 benefit bank with no inflation, it's $58.17 per month. Obviously, we can send out more information with rates. We have an online quote calculator. and all of those good things that go along with that. But I kind of wanted to give you guys an example of the cost. So, you know, sometimes people in the work site, we find we don't sell a lot of inflation on it, believe it or not, especially for the younger people, because it's not something when they're buying their medical and their dental and their vision and other things, they don't always buy that. But again, we have the 1%, 3%, and 5% if they want it. This is a sample cost to you without the inflation on it. So you see from the previous slides, it doesn't have to be some daunting task to think, oh my gosh, like, do I buy this plan, that plan? They've got 4 choices they're going to choose from, and then you're going to ask them basically, do you want inflation on it? And then you're going to go right to your cost. So moving along to the next slide. So let's talk a little bit about worksite employer groups. So our products are offered in the worksite, all of our products. That's for, well, actually all the products that we sell, but long-term care we only do in the worksite. But something that's really kind of unique to us is we go as low as 10 eligible employees. So you can go to a 10-person worksite group and offer long-term care insurance. And they can get simplified issue for all groups as long as a minimum of 10 applications are submitted. So you see the little asterisk there for if it's under 5 apps, then it would be fully underwritten, but it still could be offered as a worksite offering. So on the screen, it tells you 10 to 99 employees. The employer does have to contribute. They can do a dollar amount or define plan design, which would be like that $50,000 benefit bank. And their spouse apps do count towards the minimum requirements that are included in this. So it's really pretty simple. When you talk about our products, we have actually a, for every employer group, we set up an online electronic enrollment system. So we set that up for that employer group, and you can educate, you can do a webinar, do an on-site training, and then you can direct the employees right to the online portal to self-enroll themselves, or you can do that with them, whichever way you prefer to go. So it's pretty, I know it seems simple, but it is simple. So we do go down to 10 eligible lives. So very simple to set up a small employer group that way. And obviously, if you can get some employer contribution, you're going to get better participation rates as you go. And if you get employer contribution, let's go to the next slide and see what you get with that. So if the employer decides to contribute on the second bullet, you get a 5% discount from their policy. And if it's a couple that applies together at the same time with a significant other, it's a 10% discount. So that's a big discount for someone to get off their long-term care policy by having a significant other that lives in the same household. And I think it's 2 years that they have to live together. Don't quote me on that, 2 to 3, but with the 5%. So with our worksite stuff, really important to understand, sometimes with your smaller groups, they might not all have someone that wants to do the list billing and all that. We have a great list billing program. We offer list billing, but you can also set up a worksite with direct bill. We do credit card, EFT, anything that works for you and the employer. We will do it any way that works the best for you guys. So, and it's guaranteed renewable. Well, it's guaranteed renewable for life, but it is through ages 18 to 69. So guaranteed renewable for life. All right, moving on to the next slide. Don't want to bore you guys. I know it's the end of the day, and I'm the last thing between you, trick-or-treating, food, and soft drinks or cocktails. Okay, so what are LifeSecure's competitive hot points? So what makes it easy for these products? As I've shown you before, it's 4 easy, straightforward plan designs. They're going to pick their inflation option. And there's that word partnership plan, Carol, that I couldn't get out earlier, and I know it as well as I know my name. So that's those first 2 bullets is what they're choosing, those first 2 bullets. The rest of the stuff is in the policy. So you got the cash alternative benefit, which is 30% of the monthly benefit. Obviously, like all the other carriers, the waiver of premium once they go on claim. But something's a little unique to LifeSecure is if someone has a sudden accident and is injured severely or has a stroke, that 90-day deductible, which is the only deductible we offer, goes to a 0-day deductible and they can start going on claim from day one. So that's very unique to the industry, unless there's someone new out there that has that in there that I could not be aware of. Home modifications, very similar to everybody else. Simplified issue and underwriting. Our simplified issue, we do a great job with that. Underwriting is very quick and easy, which means you can get paid faster. We talked about the 5% employer discount. Commissions are paid weekly, and I briefly touched on the self-serve portal where we can set up a link for every one of your employer groups, and the employees can buy a policy during their open enrollment period, which we go up to 90 days at any point in time in the evenings, after work, or whatever they choose. So I think we got one slide left, and then we'll see if we have any questions. So just a reminder, we do have other products that we offer, the accident, hospital recovery, critical illness. So sometimes you might have a client that does not qualify for long-term care, or they're simply looking for something else. We do have some of these other products. The critical illness is a nice fit for somebody, or the hospital recovery if they can't get long-term care insurance, or they wanted to go alongside of it. Remember this. I know a lot of us on the phone here might be long-term care specialists. Some people might dabble and sell some other products. The accident plan is one of my favorite ones to go back and sell to your book of business, if you have that opportunity, because it's a guaranteed issue product for every single person that buys it. So you could go back and say, hey, was doing a check-in, happy birthday if you're doing a birthday call or a birthday email, or say, hey, I've got a new product, and for all my clients, it's a guaranteed issue. And the accident product is a very good product to use as an add-on product, say maybe in a year from now or 6 months from now or whatever it may be. So as well as our hospital recovery, critical illness, and of course our long-term care. All right, I think I was supposed to keep that to 15 minutes. So I want to be respectful of time and for questions. So with that said, are there any questions? I hope I didn't go too fast.
Actually, Cindy, there are.
Okay.
Diane would like to verify that LifeSecure only has 4 plans.
LifeSecure only has four plans. Yep, 50, 100,000, 200,000, and 3. Right?
Yep.
Hold on. Yep.
Yep. There it is.
Yep. Those are your 4 plans that they're going to pick from plan 1, 2, 3, or 4. Period. And whenever they pick, they automatically get that monthly benefit that's built into that plan.
Right. I think it's important for people to know that LifeSecure is a sponsor for the Limited and Extended Care Planning Network, listen to me, Planning Center, and they're going to be a sponsor for the new Employee and Executive Benefits Center. So many of you work with small employers that we wanted you to realize that we have a sponsor that has worksite programs that, as you saw, start at 5 people. There are many, many businesses that would like to consider doing this as an anchor to keep their employees at work. Cindy, can you cover the parents? Because one of the things that employers are concerned about, and we saw during COVID, is when something happens with a parent, it really does interfere with a person showing up for work. So can they sign up their parents with your product?
Absolutely, as long as they're within for the long-term, not the long-term care.
Mm-hmm.
Not long-term care, but our other products, yes.
Right. So there are solutions that are going to be very flexible in having the employer say, well, okay, we'll take care of the employees, but there are other considerations and there are other products that you might want to consider. Scott asks, is it portable if you leave the employer?
Great question, Scott. And yes, it is. There's a process if they are on list bill. So if they're on a credit card, everything just keeps going the way it is, right? If they're on their credit card or an EFT. If they leave the employer, when they leave, they check them off of our list bill process. we get notified and we send a letter directly to the employee to say, hey, we know you've left the company. Here's your new billing options. What would you like to choose? And it is theirs, stays at the same price they bought when they bought it, and there is no underwriting. It just transfers right with them.
We have a question from Dan who would like to know what is the benefit triggers?
The same as everyone else, the 2 out of 6 ADLs or severe cognitive impairment, nothing different from anyone else.
So there was another question, is this a benefit tax-free? Are these policies considered tax qualified? It's kind of
a tax qualified.
Yeah.
Yeah, same thing. Same as everybody else. Yes, it's a tax qualified plan, just like all the other LTC carriers like Mutual of Omaha, everybody else that's out there. Yep, absolutely. Great question.
Right. And we have George who'd like to know if you're any closer to approval in Florida. Florida can be a bit of a challenge because they have such an elderly population. There are other states that are equally challenging, though.
Great question again. So we are actually will not be in, we were in Florida, and we just pulled out of Florida. Unfortunately, Florida has kind of become the new New York. So we are in 45 states plus the District of Columbia. So we are not in California. We are not in Florida. We are not in Indiana, New York, or Vermont. And we have a product availability chart that shows you what states we're in. So 45 states plus District of Columbia, but not in Florida.
So how would they access that chart, Cindy? Would they go?
You know what? Well, we can, if you're appointed with LifeSecure, it's on your portal, but I could send it out to you guys if you wanted to post it somewhere or send it out, whichever. I can send you the product availability chart and it shows you those states.
Good. And what is the requirement for reimbursements? Does the the thing just slipped. Does the caregiver need to have certification? Now, I guess, do you pay for family members taking care?
Yes. For the 30% cash, so you can choose to stay at home and say if you pick the $100,000 benefit, you can choose to stay at home. You get the $2,000 per month. That would be with licensed caregivers from an agency. Or you can say, I want to use the 30% factor and I want to get the $600 a month. And that could be your spouse, sibling, family member, unlicensed people, anyone that you want to use.
And
yep, no, that doesn't matter.
Yep. Then Randy asks us, were you instrumental in sales in Washington? And of course, I think you mentioned that, but it's worth repeating that you had.
Absolutely. So in the state of Washington last year, well, for 2021, not just in the state of Washington, but were we instrumental? Anybody that was in this industry or on this call somehow was instrumental. I want to say we did a really good job with the state of Washington, how we handled it. We really worked with our partners really closely, managed our underwriting stuff. And yes, we wrote 19,689 policies for Washington last year, and we were the #1 number of writing of lives in the state of Washington for standalone long-term care. New York Life was second, and they were at 16,660.
Quite an achievement. Yeah, that was Baylor's, right?
We all lived and made it through last year. Yes.
Barely. Every time I spoke to Cindy, she was working 80 hours a week plus.
Oh, it was crazy.
And it was an interesting time for most, but there were a lot of employers there who, some of them had product in place and the carrier had left the industry and they hadn't offered a program. So LifeSecure was willing to step up and say, we understand this is something that all of your employees should have equal opportunity. And they put in, and again, because it's a simple to understand, you don't have, 80 choices. If they want that kind of, complications or opportunities, etc., there's always standalone. outside of the work
Right.
site. But for many, as you mentioned, they feel comfortable that their employer has done due diligence, and frankly, they want something. They don't want the everything, but they want good coverage. And I think it led to a lot of applications. As you say, you got through 19,000, bless your heart. And then one of the questions is, do you see your products used for executive benefits or bonus planning?
All the time. So we offer, when you set up a worksite case, and then that's a great question. Lots of great questions. I'm glad I stopped talking when I did. So yeah, so you can do an executive carve out. So you could go into an employer offering group and say, I'm going to do an executive carve out for the top executives, and they're going to pay for a $100,000 benefit plan. And you could leave it at that. Or you could say, we're going to do this for the executive carve out for, say, like the, executive directors, managers, as an example. You can do that any way you want. Then you can say for the rest of the employees, we're going to offer a voluntary offering, so at least they can have an opportunity to buy something if they want. So you can mix and match it in one worksite offering. Absolutely. And on the work sites, just so you know, so we do a lot of 10-person groups, more probably in the 50 to 200, but we've done some large ones, probably for some people on this phone call here. We've done a lot of things that are 20,000 lives, 30,000 lives. And the reason we can do that is our underwriting. We're very unique in our underwriting process, how we pull from the MIB, just with the medical records. So on a simplified issue, long-term care case, as long as they meet the age requirements, and our full-time employee only has to be 20 hours per week, we will underwrite a simplified issue app in 3 to 5 business days. A fully underwritten application, so if somebody is outside of the age range, but for simplified, or a spouse, let's say, that's not working, as an example, that is about 10 business days to get the underwriting done on that. So I don't know about you guys on the phone, but when I sold traditional long-term care, and again, it was 10 years ago, a lot of my stuff took 2 months to get through underwriting. And then by the time they were approved, I had to go back and resell that case all over again because they forgot what they bought. So the nice thing with this, because it's done so quickly, people still remember what they bought, and then they're happy and they tuck it away and they're done with it, and you can move on to the next sale. So great question.
Yeah, we have a lot of good questions here. You already answered one, that is full underwriting required after age 69. I believe the answer to that is yes. The next question was, how much does the employer have to contribute?
So the employer can contribute a dollar amount as low as $25 per employee per month, or a defined plan design. So either the 50,000, the 100,000, the 200. They can pick a defined plan design, or as low as $25 per month.
Now, Dan would like to know, does the premium stay at the issue age or go up as they age?
So as we all know in long-term care, everything can change as time goes on. So with just like all the rest of the carriers, it stays at the age that you bought it, but everybody reserves the rights to raise rates in the future should they ever have to do a rate increase. And yes, before someone else asks that next question, we have done a couple of rate increases. We have, like, this is our 3rd generation for long-term care. So we have 3 different generations of long-term care products. We also have bought out other long-term care blocks. So, so we've got a mix and match. We've got our homegrown, and then we've actually bought out other long-term care blocks. So yeah, but you do lock in for your age and your health. So you lock in just like everybody else, but we all know long-term care rates can be raised by everybody by a certain same rate class, age, all that good stuff.
Right. A question from Tim. Do you ever get into school districts?
So we definitely, yes, we do school districts. We do look at, just being fully transparent, we do require a census on our cases, and we do look at the male to female ratio. Sometimes in school districts, it can be a little bit challenging because of how many, females there are in a school district. So we do look at the male to female ratio, just to kind of look at that and what type of marketing plan you have. So we know pretty well with a deep dive with our different larger MGAs that we work with, how they do with selling, to spouses and things like that. So we will look at that. Definitely we'll look at school districts. Hospitals, we're probably going to shy away from a little bit because that's really heavily populated in the female ratio. Nothing against females, but we definitely know they go on claim more. So we want to make sure we have a healthy book of business.
A balanced book of business, absolutely.
Yep.
Winnie wants to know if your products are available in New Jersey and Pennsylvania.
We are available in New Jersey and Pennsylvania. Yes.
And how long have you been paying claims in the LTC market? Now, remember, Cindy just told us that they have homegrown business and they have business that they have acquired. So they might have been paying claims on purchased or business that they took over as well.
Yeah, so we've been correct. So we've paid more claims, and I don't have the exact number in front of me. I should have pulled that up because I do actually have it. We have paid more claims on the business that we've purchased than on our own block of business. But just a real quick, I won't belabor this. I wanted to do a test. Well, didn't really want to do a test, but I had an opportunity to do a test. So my sister unfortunately passed away at 46 years old in 2016. And she was battling cancer. And as she was doing this, I said, well, Janice, didn't you get like a hospital recovery plan? Because I had sent an agent out to her place of work. And she said, well, yeah, I think I did. I said, well, because she was in another hospital. So, but I think I bought one of those long-term care plans from you guys. I'm like, are you kidding me? So my sister had a long-term care plan at the time that was $100,000 in benefits. So she didn't have a big plan, but she had $100,000 that was a benefit bank we offered back then, which is one we still have now. So she had $2,000 a month for home. And so I thought, I don't want to tell anybody, because we had different last names, right? I don't want to tell anybody at the company that my sister is the one going on claim, because I want to experience firsthand how this claims process works. And it was so unbelievable that it went so smoothly. I can tell you, you could check with any agents. One thing about LifeSecure, we pay our claims. Obviously, if somebody is not eligible yet to be on claim of the 2 out of 6 ADLs or severe cognitive impairment, it won't get paid, obviously, with anybody. But we pay the claims, we pay them on time, and we have a very, very great claims payment history.
I would agree with
that. And we pay claims, just so you know, we pay a lot of claims, more claims in the accident world and the HR world. So we have a whole variety, and we do everything in-house. So we used to subcontract like TPA services. There's a couple little things we do with phone call interviews, but we basically do everything on our own, because we know we do it better than anybody else. So, yep.
Good.
So lots of good questions.
Yeah, they are. Ted wants to know if you do churches. I remember churches when I was doing that. So
yeah. So unfortunately, I don't believe we'd be able to do a church unless, now, not the congregation, but if it was the employees of the church. So remember, it's got to be a work site case. So there's got to be an employer type of group, because on the application, it will say, when you answer, once we set your group up, it'll say, I attest that I am an employee of, LifeSecure Insurance Company. So that is built right in the application. So if it was the people, the members, not the members, the members that worked at the church, yes. I've actually enrolled a few large churches, but the congregation you couldn't enroll because it would be an individual product.
Right.
It's a great question.
Yeah.
I love how you guys are thinking.
Yeah, they are. And Gail would like to know if you use unisex pricing.
We do male and female. It is male and female rates, not unisex.
Okay.
For our long-term care. Different products we do differently, but that is, yes.
Right. Then she does ask about providers in the worksite place, and I will answer that one. We have several sponsors on the Limited and Extended Care Planning Center. You do have to be a NAIFA member to access all of this information, training, etc. But the brokers there can help you with your needs. Obviously, LifeSecure has a very unique product and a unique way of working in the worksite. But yes, there are other worksite providers in the space as well. So
and we love all of them. We need the competition. We
Yep.
you know we love them all, and in fact, I do a lot of top producer trips and conferences, and I go to dinner with our competitors. So we're all we're all very friendly, and we all want us all to succeed and stay in this industry because it's healthy for everybody.
This is an interesting question. We have just a few more minutes, but Tom asked the impact of family history on underwriting if the applicant has no symptoms or history. Well, wait, what do you mean the impact? You know what?
Are you asking about, say, I think I saw that pop up. Are you saying, like, does it ask a question? Did your mother, father, brother, sister ever have? Or is that where the question's going?
I would think. Yes.
Okay. So if it does, we don't ask that question. I knew someone was going to ask me a question, so I printed an application because I knew I wouldn't have all the answers, but I've done pretty well so far. I'm just going to say.
Very well.
Yes, we do not ask that.
Right.
Nope.
So at this point, if anyone else has a question, I would give you a minute to post it. In the meanwhile, once again, we thank Cindy for taking time out of her busy day and for not only sponsoring one center for NAIFA, but also considering how many supplemental products they have for worksite, also sponsoring over to our employee and executive benefits center. Zach put up the URL for that center, but you can always go to NAIFA.org, and if you scroll over the bar, you will see that we have 7 or 6 centers, all focused on different areas. Just as the Employee Benefits Center focus basically on what is happening at worksite. We are very interested because we know with what's happening in Washington, the state, with California, and with some 15 other states, that a lot of employers are starting to think about what it is that it's going to, one, take to protect their employees, and 2, we're in kind of a new era where employers have to deal with what employees really want out of a job, out of a position. And many of them do purchase most of their coverage at worksite. So in NAIFA as an organization, and we're very grateful, Cindy, for you taking time to do a worksite presentation, because we feel that many of our members need to have access to more knowledge about working. We're middle America, and we work with a lot of employees, and we want to know that we can discuss what is on their minds as well as individual products that are out there. So if there are no more questions, Cindy, thank you so much. I would also like to thank Zach, who has been on since very early this morning, setting everything up, contacting all of you. You did a great job, Zach. Thank you so much for your support and help. And then finally, to all of you who have spent the day with us, we really appreciate that support as well. If you need to contact me, I am cgolden@naifa.org. And I look forward to any feedback, any suggestions. We really had fun with using Halloween as our day. for this session. And we hope all of you will have a wonderful Halloween. Enjoy your sweets and treats, and we hope you don't see any tricks. Thank you again, and goodbye.
Thank you.
Welcome.